Sixth ticker today, the Spider S&P 500 Home Builders ETF, XHB. Take a look at it there. Shares trading down about 0.5% today. Shares of home building companies are on pace for their best quarter in 7 years. That's according to the Wall Street Journal. This is coming as home prices rose 4.3% in January, the smallest gain in 4 years. That's according to the S&P Case-Shiller Index. Yahoo Finance's Brian Cheung is back with me to talk a little housing. Brian, the builders are tilting a little bit lower in terms of the new home price data. The question, of course, is what's the latest here, and is this market about to turn? Because that seems to be what everyone's saying.
Yeah, so as you mentioned, it was the new data that's kind of new today. 4.3% was the annual change as reported for the month of January. That is the slowest since April 2015, but that's kind of dissonant with what we've seen in housing starts. Actually, the most recent data that we've seen was actually 8.7% increase in February. That's month over month. That is a pretty large number. So you have this question about whether or not the pipeline of homes is not matching up with the actual demand for homes, since the prices have not inflated nearly as much as we've seen the housing starts. But as you mentioned, we are looking at the XHB, that is the Spider S&P 500 Home Builder ETF. This covers the likes of Beazer Homes, D.R. Horton, KB Home, and these are all home builders that have seen pretty impressive earnings growth so far. And again, we're talking about this most recent quarter, during which actually these stocks grew by 24%. That is this XHB index since Christmas. Again, that was kind of a low point for almost all equities. But in that same time, the S&P 500 only went up by 19%. So you see a lot of these home builders doing really well. And when you look at the earnings reports for this quarter, it actually, you look at BZH, for example, they beat earnings per share pretty readily. NVR, they beat earnings per share, also beat on revenue. So these are all companies that are doing fairly well. But it does raise this question with the new Case-Shiller Price Index information about whether or not we are reaching an inflection point.
Yeah, and you can see there on the full screen, actually on a day where the Dow is trading higher, actually all the markets are, NASDAQ, S&P 500 as well. Right. The home builders were actually down. Is that just because of the new the data that came out on housing starts?
Yeah, and that's exactly why. The question here is whether or not these home builders are perhaps creating too much of an oversupply. Actually, when you look at the Beige Book, this is Federal Reserve data that basically takes an index of how housing markets, among other economic indicators, are doing. They said that residential construction activity was steady or slightly higher across most of the U.S., but that residential home sales were generally lower. So again, you think about the lag here, right? I mean, these companies have these plans to build these homes for years, but home prices is current now data. So you have this question about whether or not the pipeline is perhaps overshooting at the point of demand at the moment. Now, I do want to note that this doesn't necessarily mean that there is a housing bubble. Actually, earlier on Yahoo Finance, on our On the Move program, we had Dr. Shiller, who actually created the Shiller Home Price Index, and he was talking about how, yeah, the prices are going down, but he says that we're not in this sort of mood right now. I'm quoting, "We weren't so speculative as we were back then, and we're not talking about the bursting of housing bubbles." So not necessarily pounding the alarm, but definitely something that the Fed and probably other economists are watching very closely.
I'm sure they're watching it very closely. These are all data points that they say when, the Fed is data dependent. It's watching these, right. These aspects very carefully. Brian, great to see you. Thank you.